In this video, traders, we're going to look at, are 1 minute candlesticks good to trade from? Stay tuned. Hey traders, warm welcome to you. All right, so this was a question from a subscriber or reviewer. Either way, appreciate your question, as do I appreciate all your questions, comments, likes, dislikes. Thanks for the engagement, guys. Right, okay, so the question was, are 1 minute candlesticks good to trade from? You've got people on this side who are saying, yes, they're absolutely amazing. I've made an awful lot of money trading them. And the people on the other side who say they're the worst thing ever, they're far too noisy, all they do is cloud my judgment. Now, I'm going to give you the truth, because I can sit on this side and say I've made an awful lot of money trading 1 minute candlesticks, and I can also sit on this side and say, hey, you know what, under the wrong conditions, they're the worst enemy. So let's look at the yes and the no's. Right, so are they good to trade from? Yes. Oh, actually, before we go into that, guys, let's just clarify what we're talking about here. So let's do it down here. So 1 minute candle, obviously we know what a candlestick is. It's showing your time frame setting on your chart, whether it's a bar or a candle, doesn't really matter, is set to 1 minute. So that takes 60 seconds to complete, and then another one prints, another one prints, another one prints every minute. So you're seeing a candlestick form based on 1 minute as opposed to a 15-minute daily or have you. Pretty sure we know that, but now we've got that out of the way, let's move on to yes. So are they good to trade from? Yes. So the main benefit, guys, are these two things here: accurate entry and precise signals. Well, you know what, and zoomed in action. This is the biggest thing, because if you think about it, you've got this, okay? So you've got some candlesticks here, and let's say if we've got that in the screen, just about that's enough for us. And let's say we were trading something like this, right? Let's say you had some support here, and you were saying, right, you know what, I want to trade the market if it fails on that support and bounces off that support level. Now, if you're in a 15-minute candle, you'd have to, you get 15, obviously 15 1-minute candles in that, but the point is you wouldn't, unless you're watching the candle move in and out, see how it formed that candle, right? You would just see, and let's assume we had similar ones here, you'd just see one big block like this, right? Wherever it opened and wherever it closed, and that will be it. No more information. The 1 minute gives you far more granular information, yeah? It gives you an idea of what has happened in that time period, and you have a far more accurate entry, because you can see, hey, the market's gone down here, and maybe it's even probed even lower off the screen and pushed back up in a 60-second period, and that might be, okay, well, I know we've tested below that low, we didn't close below there, we didn't really highlight any more sellers, and we've popped back up, there's my signal to go long. And all you would see is a completely different picture on a 15-minute candle. You know, maybe that's a wick, whatever it may be. But the point is, then you can finesse your entry. You're seeing much more detail. So from a day trader's perspective, or from a scalper's perspective, you're kind of looking at this going, right, well, that's my signal to go. I don't have to wait until a 15-minute closes. I don't have to kind of look at the 15-minute. And also when you're reviewing your chart, you can say, well, actually, you know, when we tested that before, we only had one little brief dip under. And you know, how different is one brief dip under to spending the full 15 minutes, 14 minutes under, and then dipping up in 14 minutes? That would still give you the same candlestick shape. Opened at the top, dipped back under, stayed on there for 14 minutes, went back and closed. You'd still get that big tail, but that wouldn't tell you the information. Actually, it stayed under for a long period of time. That would be exactly the same pattern as just dipping down in 5 seconds and coming back up. But it's a different story, and you might want to trade differently from that. So you can fine-tune your entry on a 1 minute candlestick. You can get a precise signal. You can say, okay, well, actually, you know, the first push then, a minute time period isn't a long period of time, but I'm making my judgment and assessment based on that. And you're zoomed into the action. And that's the big one, guys, is that you can see if it's useful for you. If you're swing trading multiple weeks positions, then it may not be relevant for you unless you want to fine-tune that entry and use that. But if you want to zoom into the action, 1 minute candles are great. They're super useful. Now, with that being said, let's have a look at the no's, because like everything in trading and probably life, guys, there's always pros and cons with everything. So, no, the big thing is the noise. If you are always on a 1 minute candle, they can be super noisy. What you must do when you're trading 1 minute candle is only look at them at the levels you want to do business. Okay, the levels you're looking to trade at. You don't mean necessarily going to initiate a trade, but you only want to be looking at these really small time frame charts when you're looking to trade. So at a key level of support, at a key level of resistance, at the open, at the close, at prior highs, all this kind of stuff, so that you want that granular information, because you don't want it anywhere else. If you're sitting in no man's land doing nothing, who cares? Nobody. You don't need that intimate information. It's pointless. It's just going to give you noise. And the problem you have with that is, I'm going to put crosses here, is you get an urge to trade, right? And this used to be a big thing. You sit in front of the screen, the candle gets too zoomed in, like the chart will recalibrate. And if you probably notice yourself, guys, you're in a 1 minute chart, starts going quiet, the scale will recalibrate to fill the screen, because you might have it on auto setting scale, which most of the time is the most useful setting. But when you do that, of course, you're seeing these candles, you're like, whoa, it's a massive move. And you're not looking and see, well, actually it's 5 ticks. It's a complete irrelevance. And when I zoom out and I kind of minimize the scale and I look at the bigger picture, it's, 5% of the daily range. It's 2% of the daily range. It's nothing. It's complete irrelevance. And so you've got to be careful you're not too zoomed in under quite a period of time. You've got to be careful you don't get the urge to trade just by looking at a 1 minute candle. You've got to be careful you don't get caught up in noise. So, yes, they're super good. No, they can be dangerous. The best trick to do, guys, is to go higher and work your way down when you're ready to trade. So make your trading decisions on your daily, your 15 minutes, your five minutes just about, and say, okay, that's the area I'm looking to do business. When it comes in to that area, not too early, not too late, when it comes into the area, then go onto your 1 minute to fine tune your entry. If this is your style, fine tune that entry, get the sweet spot that you think is right for your stop placement, your entry, etc. And then come out of the 1 minute again when you're waiting to hit your target. So 1 minute candles good to trade from. There's not a definitive answer. I think if you use them correctly, they're brilliant. If you're not careful, they can be your worst enemy. So use them correctly and you'll be good. Take care. Bye-bye.